Okay, first time webinar.
Woohoo!
All right, so we're gonna have a few different topics that we're gonna go today. Answering some big questions. The first one being, is it the right time to buy? That seems to be a common question I've been getting with the market being, such a high sellers market right now. I know people are aware that there is low interest rates right now, and those are predicted to go up. Um, so we're going to talk a little bit about that. And then we're also going to be talking about some tips and tricks on how to win an offer. And we're going to talk briefly a little bit about the buying process. We're just going to touch on that a little bit at the end. So I guess we can get started. Okay. So just some kind of tips on winning an offer. There's some things that can cost money, and then there's some things that you can do in your offer to increase your chances without spending a lot of money. It's really going to depend on whoever's house it is and what's important to them. So writing a personal letter could be something free that you do to increase your chance, writing what you love about the house, writing a little bit about your family and the things that you like, and that's enticing you to move forward with the offer on the house. Another thing is not asking for any closing costs. So with your loan, you're going to have some closing costs with there, and then you're also going to have your down payment. So some people like to ask for that, but if you're wanting to win right now, I suggest not doing that. Offering to pay for the title policy and the survey could help with you. And flexible closing.
I have a question for you. So the title policy, would you say that's like something to be prepared for on cost size, like pretty close to about 1% of the loan size, do you think, for the owner's title policy? Yeah.
Yes.
Yeah. It's it definitely a part of like the overall expense, and 1% is a good number. I think that's a good estimate.
Yeah, so that's something that you can offer. Usually that is a typical seller fee. So offering something like that could help entice them, knowing that they don't have to pay for that. The flexible closing, if they need a lease back or something like that, offering them that. Doing a shorter option period. The standard's about 10 days long. So you can shorten that period. This is the time that you get your inspections done. So 5 days, 7 days is a good time if you're that will help motivate them so they don't have to keep their house off the market for 10 days. And a shorter financing period. So getting a full approval, wouldn't you agree? A full approval would be best. That way you have all your documents in and ready to go with the offer.
Yeah, I totally agree. It's in today's market, things are flying so quickly with the limited inventory. So having the mortgage side out of the way and knowing what that budget looks like up front is super important. And Tiffany, for the buyers that are on the phone or the buyers that are in the process of maybe selling for the first time or buying for the first time, can you explain what that what the lease back would look like?
Yes. So for a lease back, a lot of homeowners are obviously needing a place to go. So allowing them to have that time to close on the property so they have their funds, and then giving them some time to move out of the property into their next property and have time to close on their next one, and having time to clean their house will make the sellers usually feel a little bit more comfortable, because buying a house is a huge deal already, and then selling one is a huge deal already, and then the extra stress of, oh, I have to be out of here in like the same 24 hours it's usually impossible for most people. So offering that could help set the sellers at ease.
So I hear you say is that lease back gives the seller, who is now the buyer, time to be in the property while they're closing on the next house.
Yes.
In that time frame. Okay, cool.
Mm-hmm. Yep. And then having the full approval we kind of talked on, and then another big thing that I've been seeing a lot of right now is the appraisal waivers, or even a partial appraisal waivers. Because a lot of the times we are having to go over the asking prices, even if the recent sales don't reflect that price. A lot of people are coming in really strong right now. They're coming in with cash offers, or they're coming in with, hey, we're going to pay $10,000, and or we are willing to waive that full appraisal of that $10,000 over. I've been seeing that I on the listing side as well. Those are things that I look at. If you're going to come in 10,000, 20,000 over asking, that's great. But at the end of the day, the house has to appraise. And so that doesn't really mean anything if you're not willing to waive that right for the appraisal. So those are just some tips on that.
Yeah, it makes a lot of sense. The appraisal waiver is definitely one of those options that does help with that offer. And then having the proceeds available, knowing what that looks like, having a good conversation with the realtor to understand what that appraisal waiver means when you're ready to make that offer as aggressive and attractive as possible.
Right. Yeah. And I discussed that fully. When I meet with someone, I set that expectation, like, this is what it's going to look like. You may have to come out of pocket X amount of dollars. This is what I'm seeing as far as comps. So be prepared. It could be, we could potentially get it to appraise at that value, but this is what I'm seeing in the comps right now.
And
that extra funds.
That's such a good point, Tiffany, because you're right. When you think about appraisals, it's a historic version of value. So it's going off of what the properties are being sold for. But when you look at the pace of sales in today's market, that pace of sales is increasing at a pretty steady rate of each offer being accepted above asking price. So when you make the offer with that appraisal waiver, it's good to be prepared for what it would look like needing those proceeds. But in some cases, it may not even be something to worry about because the appraisal may actually come in right within that offered price. So yeah, great point. Yeah, definitely something to consider when making that offer.
Yeah. And I always too, like, especially in situations like this, I send my own comps for the appraiser. Whether or not they're going to look at them or not is up to the appraiser, but it doesn't hurt you to send those to them. And a lot of appraisers kind of expected, I think, in today's market for us to send them, because it is tricky right now with the prices and everything the way they are.
Boom. Yeah, you're exactly right. We do see that on our side where the appraiser just comes up with a estimated value based on his version. And then we have to stutter step and go back to the agents to find out what those comps look like. So to do that homework, that initial time spent to get those comps up front is what an expert top agent would do. So that's awesome.
Yeah.
Oh, that's a good one.
Yeah, so we've been getting a lot of, I guess, people worried about the foreclosure, if there's going to be a foreclosure or a bubble, or wondering if the prices are going to go down next year versus, right now the prices are kind of high. And people are wondering if the prices are going to be either lower next year, or if there's going to be a huge foreclosure market. So this is kind of some information that we found. With we are expected that the prices are going to keep going up. Our inventory is super low right now, which creates a huge audience of people wanting the same house. So there's still going to be a lot of multiple offer situations with the low supply. So we don't see anything coming from that. There might be a few foreclosures, you were saying, John, right? There's going to be a little bit of a foreclosure market.
Probably. Yeah. We're starting to see that timeline of certain programs expiring, and there's been a lot of government assistance to help out with certain financial challenges. And when that's over, there could be some foreclosures that hit the market. And I'm so excited and glad you're hitting on this slide, because you're right. This is a big concern in today's market, where some clients are saying, well, let me just wait a little bit. And what happens with that is some pretty, there's some technical budget issues that will happen if you decided to wait for the wrong reasons. So yeah, definitely a great point on
Mhm.
this slide for sure.
Yeah. So since for the, I guess what was it? The downfall in 2005,
Oh yeah, 2008, 2009.
2008. Yeah. So
Yeah,
ever since then, banks realized that by flooding the market, it's not good for them when they're trying to get their houses sold. So they're offering, different payment options for people, and instead of going to be foreclosing on all the properties, we don't feel like there's going to be a foreclosure market, but it's not going to affect us directly.
right. And a lot of that has to do with the point you hit on earlier, which is that shortage of inventory. So since there's not enough houses, even though these foreclosures are hitting the market, they're still going to be in multiple offer situations where they'll
Right.
be right at peak value, and you're
Mm.
buying a foreclosed home at a current market price because there's just not enough houses.
Right. Yeah.
Yeah.
So a lot of these distressed homeowners are going to be able to get their equity out of their house just because of the low supply chain right now.
Boom. Great point. Great point.
Do you want to talk about this a little bit, John?
Cool. Yeah. Let's talk about the rental market. So the rental market's it's seen some really big impacts with what's going on in the real estate market. And a lot of it has to do with rising rent costs. Rising rent costs that we're seeing year over year averages between like 10% up to 20%. And what that looks like on a monthly basis is an average of about 1,800 a month, 1,770. But the most recent figure was right around 1,800 this year, which is $300 higher than it was last year, which is
Wow.
big, huge change when it comes to that rental budget. And now when you look at where mortgage rates are and the price points of buying a home, it's going to line up really close to what that would cost to rent a house. So knowing what those options are up front is super important. This next bullet point is talking about the robust demand. So when you look at who is going to be in our market, it's a combination of investors and millennials and first-time buyers that are trying to purchase their first-time home. That market, 5 million per year, is the average demographic of people who are within the beginning, the low 30s to enter the market. So that's a lot of people that are going to be buying houses in today's market. So when you look at that runway of, okay, I'm just going to wait until the market settles and when I can actually, get something from the seller, you may be one waiting for a really long time. And then the other is you may want to pricing yourself out of the market because of how fast these property values are continuing to rise, because they're definitely not going to go down based on the demand that's in our market today. So some facts about budgeting and figuring out what that looks like. That's what this slide is all about.
I think too, even the younger demographic right now, like Gen Z is starting to buy. I've been noticing
Oh
that.
yeah.
I've been getting several actually 20 people that are in their 20s, older 20s.
Yeah.
And they're
Smart
ready.
kids.
Yeah, they're ready to invest. They have money, so they're wanting to invest in either, buying their first home or even getting into the rental market. So buying properties to use as rental income.
You're so right. Yeah, such a good point. And that's a smart way, great strategy to build wealth is real estate. Getting
Mhm.
that first home in there and figuring out if it's, if it's within reason of what you can, what's affordable.
Right. I agree.
Okay, so this one right here is a wait or rent versus buy 1 year analysis. So if you look at the cost of rent with today's market, along with the cost of mortgage rates and the purchase of property, and if you waited for 12 months, a lot of this example is going to be fully based on your capacity to buy. So if it's just not the right time, it's not the right time. But if you're waiting for something to change in the market, this slide is completely for you. You want to make sure that you're making good choices and using the right reasons to why to buy or rent. So here's if we look at the left side, this is today's market, 1,800 per month, general rule of thumb of what the average rent price is going for. If you're buying an FHA, a property on an FHA loan, let's say you're at 250,000 for your sales price, that mortgage payment with taxes and insurance is right around 1981. So about 1981 a month. So a little higher than that market rate for, for that price point. But when you think about where rent's going and the slide that we just covered on that increasing of rent prices, 12 months later, that rent's potentially going to be about 2,200 a month. That's a 20% increase that we're talking about.
Mhm.
And, if you waited that year, your mortgage payment's going to be about 2,239 right there at the right-hand corner of it. So, make sure that if you are wanting to buy, or if you're not sure of buying, that you have the right reasons and you know what that capacity looks like. Because at the bottom right-hand corner, it just recaps all that. So 12 months, it's a $258 a month increase, and your sales price just increased to about 13,000 in that 12-month span. And Tiffany, I would love to get your input on this, because the 5.5 appreciation based on where things are going, would you say that's low, or is that aggressive? What is your thoughts on that 5.5?
Yeah, absolutely. I think that's a little low. Um, we're seeing, homes that were 250 last year be in the high, like in the 300 range right now. So that's $50,000 increase in 1 year. Granted, there was like when the pandemic hit, there was a surge of buyers. So during that 2 year span, it went up a lot. And we thought it was going to slow down, but it's proven that it still keep going, like especially people that are wanting to get in on these with these lower interest rates. And I think it's important for people to realize that the rates aren't going to be this low forever. And right now you have more buying power than you will if you were to wait. And then you're going to have a higher interest rate on top of whatever the appreciation value is.
Boom. Yeah, you're absolutely right. And you can see that in that payment right there. It's like, the rate on the left side is 4, the rate on the right side is 5, which is a full 1% bump. But when you look at where we are today with today's mortgage rates, we were at a full 1% bump from where we were last year. So rates,
Yeah.
rates do have that projection. If they hit 5%, who knows, right? But to be prepared for what that's going to look like is really what this slide's all about. And in the left corner, that's just an example of rent versus buy. So the dark shaded blue, I think that's a blue, is the mortgage payment. And then the purple would be a scale of rent if it continued to grow at a 20% rate. So if you just took like year 3, which is that one in the middle, 2631 for monthly rent, that's potentially where rent will be in that timeline. Whereas if you just bought, your payment would be pretty consistent. Obviously, taxes may go up a little bit, insurance may change,
Yeah.
but overall, your payment's going to be way under 2,600 a month. So just some things to think about when you are considering, whether to wait or to move forward with buying.
Yeah, that's definitely a good point. Especially about the taxes. People wonder about that all the time. Remember that you can protest your taxes as well. So they can come to you. Just it takes a little research to get that. I can always send you comps too. So remember that when you use me, if you ever you need comps during the tax time, I'm happy to give you those. I have fought and I have won on my taxes. So I know that it is possible. It also helps keep your neighborhood taxes. So your neighbors will be very thankful for you doing that. Uh,
The fact that you've fought your taxes is a huge deal, because nobody does it. And there's realtors in today's market that do what we do, and they do not fight their taxes. They talk about it, but they don't do it. So the fact that you have the experience to know what it looks like to get that done is a really big deal. So having
yeah,
a resource that has done it in the past is half the battle. So that's awesome. Yeah,
yep,
that's cool. I may be going to you later.
yeah. Let me know. I think something also interesting to touch base on this as well, like just looking at a 12-month and talking about the appreciation. When you rent, you're not going to appreciate anything. You're not going to make anything from that. You're helping someone else pay their mortgage. But when you buy something, that's yours. That's going to be your appreciation. And 5.5% is pretty low, in my opinion, from what I've been seeing. And so keep that in mind. Like, even if this isn't your forever home or just a place you're going to be there temporarily, let's say you buy it for 250 and next year it's worth 300. That's $50,000 that is coming back to you. Like, that's your investment. That's money that is yours for the keeping, and you can keep it as a rental. There's so many options when you buy a home versus when you rent. You can lease it out, you can Airbnb it, you can sell it, you can do some improvements on it and flip it. There's just so much opportunity to make money off of it. So maybe it's not your forever home, maybe this is your first home. So just looking at that and being like, hey, I'm going to make this investment now. This is a lot of money, but know that you're going to make your money back. We're not expecting for this to go down with, all the people that are moving into the city. We're not expecting it to slow down for at least another couple of years. So just keep that in mind when you are debating if you're going to wait. Is if I buy this now, next year I could potentially have, an extra $50,000. And then you could spend that money for your next home if you wanted to.
That's
So,
right. Boom. Pay off some debt and buy the next one.
exactly. Buy the dream home. So
Let's move to the next one. It actually ties in really, really well with what you just touched on. So what this is a good picture of what the benefits are. Owning a house is exactly what Tiffany touched on. Values, you got some really good appreciation, so that value is going up. And not only that, but your balance is going down. Some things that you just don't get when you're renting a property. So here's a great example. Average home time frame of ownership is anywhere between 5 to 7 years. So six years is like right in that little sweet spot of the 2 years. Appreciation 5.5. Again, as Tiffany touched, it's more of a like conservative estimate. We're at like 8 to 10 right now. So these numbers can be much more aggressive, but for the purposes of sharing some truthful, good information, this is a good measuring stick. All right, so let's talk about it. So if you bought a house today at 250,000 and you hold the property for about 6 years, that value is 344,711 at a conservative rate. So that's like $94,000 in
not bad
appreciation
for a few years.
Boom. I agree. Totally. That's a big jump, 94,000. And then the balance on the mortgage. So you start with, let's say this buyer did an FHA loan and we started at a 241 loan size. Well, 6 years later, that loan size is now 213,000. So that's $28,000 gain just in the amount of principal you've been paying. So rather than, like you were saying earlier, rather than paying somebody rent, you're paying yourself rent, and you're getting that back in an amortization gain of about 28,000. So the combination of the two over a 6-year period is about 122,000, which is, it's very significant. I mean, there's no other investment that's going to be able to get you that size of return in a matter of 6 years, as consistently as that is.
Mm-hmm. And all you have to do is keep the property. I mean, you're not really doing anything else but making your payments, and that's it.
That's right. Yeah, exactly. And when you think about initial investment, let's touch on that a little bit. So when you buy stocks, you're 100% putting money into those stocks, whether it's 1,500 or whatever that number is, 20,000. When you buy real estate, you're putting your down payment and your closing costs. So that's your initial investment. The growth of your investment is going to be based on the value of your property, not the amount of money that you put into your investment. So that is the difference of why real estate is one of the best ways of purchasing, one of the best ways of growing wealth in today's market is real estate versus like putting those monies into stocks that are going to be so volatile. So building wealth in real estate, it's all about just getting started and knowing, what those overall benefits are.
I agree.
Okay, so this is all right, so how to get started, right? First time buyer programs and what do they look like? So left side, closing cost scenario. If you did not participate in a first time buyer program, then the funds to close with the down payment and closing cost in green is about $14,950. And that's before the earnest money and option money credits. And then to the right is first time buyer program. So this same sales price, 250, funds to close would be close to about $4,950. So that's a big difference. It's like $10,000. To qualify for first time buyer programs, you do have to have certain parameters. So part of it has to do with the income that you're receiving along with your income debt ratio. A good mortgage company will walk you through how to qualify and what that looks like. But the earnest money and option credits, I do want to touch on that a little bit, because on that first slide, Tiffany, you shared that there's earnest money, there's option, but let's talk a little bit about like, what is the average earnest money deposit look like, and option money what does that typically look like as your initial offer
Yeah.
cost?
So when you do an initial offer, no cash is dispersed, obviously, until you get a fully executed contract. So that means both you and the buyer and the seller have to agree on the terms of the contract and sign it. And so at that point, you have what's called earnest money deposits, a good faith amount. So usually it's pretty typical across the board. It's 1% of the purchase price. So if in this case being 250, it'd be 2,500 for that earnest money deposit. And that does go towards your closing costs. And then there's also what's called the option period money. This is usually $10 a day. Sometimes we make that higher if it's multiple offer situations, just to kind of entice the sellers to choose our offer. But this time period is around 10 days. So 5 to 10 days, $10 a day, roughly. It's not too much. And this is the time you get your inspections done and discuss stuff from there. And see if you're going to move forward or back out of the contract, and you will get your earnest money back if you decide to back out during the option.
So that's a good thing in this market, right? Like where, you have to make decisions quickly, and knowing that you have an out if you absolutely needed it, once the inspections come back, and once you have that offer initially accepted is a pretty big deal.
It is.
Yeah. So I'd say there's 4 things that are proceeds related when you make your offer that you want to be prepared for if you're buying for the first time. So earnest money, option money, inspections, typical inspection cost. What would you ballpark an inspection fee to be?
Depends on obviously if there's septic and stuff like that, but usually it's around $400. 4 to
Yeah.
500 would be a good amount, just depending on if you're going to do termite, if you're going to just do a basic one, if you're going to add septic, well, stuff like that. It can vary in prices from there.
And the inspections are so detailed. They cover basically everything about the property, right? So there's like condition, and then there's wear and tear. And then knowing the difference, having a really good trusted realtor to know the difference is really all about,
You cut out for a second.
Yeah, I'm sorry. I think that was me.
Okay.
I was making sure everybody was paying attention.
All good.
Yeah. Okay. So yeah, the option money, inspections, anything you want to add on inspections, or does that pretty much cover?
That's pretty much it right now. I can touch more on the process if y'all are interested. I usually do a first time home buyer consult, and we go in detail over all that from, getting pre-qualified to closing, what that all looks like. Obviously, any lender questions you would reflect back to John, but those are things we would cover in our appointment, is what to expect during that time frame.
And then to circle back on those 4 items, we talked about the earnest money, option money, inspections. The last is the appraisal. So the appraisal is about $600 you want to be ready for. Those 4 items, well, actually the 3. The only thing that won't be subtracted from the funds to close is the inspection, because we don't require it. It's just something, it's good to have, but it's not part of the overall funds to close. But let me ask you, so, buying a house today can be really challenging, right? I mean, there's some things to like frustrations that you want to avoid as a buyer. So if you were to give me like a few things, what should someone buying today keep in mind to have the right mindset to win offers?
So I would just remember to go with it with an open mind. And, when we sit down and meet, these are some things that I discuss as well, going over your perfect home, whereas what's available, the available inventory. So those are things we look at. I show you, I ask you all the questions, like what your absolute dream property is. And then I show you based on what you're wanting, what's available from there. And so just having that expectation that you might not get every little item, but focusing on the main things. I always have people focus, of course, on, the location, because you can't move the house. So you want to make sure you get in the location. Like if you'll have a place that y'all need, like a school district or something like that, focus on the important things for you and your family. And also the layout, like that's really important. You can't really, that gets expensive when you start changing all of that inside. So if you need 3 bedrooms because you have X amount of kids, and you need that, have that as your flexibility. And if you need a game room, like for us, when we bought our house, the game room was 100% must have because we have the toddlers. So we needed that space because we had toys all over our living room. So we wanted a space where our kids could hang out and have their toys all in one room. So we weren't looking, necessarily at granite countertops and paint colors and carpets and stuff like that, because those are things that you can change in the house over time. They're not going to cost you as much money as, adding another room or whatever like that. So just keep your priorities on where you're going to spend your time the most, and also, the location, or be the price point.
Such a great point. Keep your focus on where you spend your time the most. That's such a great point. And knowing that, it may not be the perfect house, especially with not enough inventory out there. So knowing flexibility, like you said, super important. And just being aware that, hey, you're going to have heartbreak in this market, and not every offer is going to be accepted, but being prepared for that initially, and having someone who has the experience, a realtor who has the experience to help guide you through the right path, is the difference of you deciding to just be frustrated, not move forward, or to win in the market like today. So great point.
Yes, I think it's important to have those expectations up front. That's why I like to meet with everyone, because I want to know your expectations. I want to know what's important to you. So that way I can educate you on what's happening. We can talk about what's available, and we can really get it hammered down. So when we do go, you're ready. You know what to expect. You know how much roughly it's going to cost to move in with this house. And you have a chance of possibly losing a couple of houses, but just know that we're going to find you the right one at the right time.
Boom.
So
that's right. Okay, well, I think that's all we have. Right? I think yeah. Don't forget to get pre-approved. So that's my website at the top if you want to get started on an application. Tiffany LeGrand, that's her email, the legrandteam.com. If you haven't checked her email, you've got it. I mean, if you haven't checked her website, you got to check her website out. It is a lot of great information, really great flowing. I've got website envy.
Yes, definitely go check out my website. If you want to start looking at a home or curious about the value of your home, you can always click there, and we will send you some information. And also, if you want to reach out to us via Facebook, that's cool too. Our cell phone numbers, if you have any questions on the real estate side or contracts or anything like that, you can reach out to me. And then if you have any financing questions, or you're ready to get pre-qualified, you can reach out to John as well.
Awesome. Well, guys, thank you so much for taking the time to join us today. And Tiffany, thank you for putting this together. I think this is extraordinary value that everybody really needs to listen to. So thank you. I think this is awesome.
Awesome. Well, you have a good day.
You too. Bye.
Bye, everyone.